Gold, the safe haven, the asset that it is supposed to protect you during crisis, war, inflation, is going down. And not just slightly, it has lost 18% in the last month. But why is gold going down in a moment like this one when everything around us looks unstable? Is gold broken, or are we completely misunderstanding how it actually works? What's up guys, it's Pablo here and welcome back to my channel. I've spent the past few days trying to understand the gold market and especially trying to understand what's happened that caused the market to lose an 80% in the last month. And I've identified two main factors that I'm going to explain you in this video, so stick till the end and let's start. Before we even talk about what's happening in the global market right now, we have to reset one key idea that it is super important to understand everything. Gold is a non-productive asset, so it doesn't produce dividend, it doesn't produce interest, no cash flow, nothing. It just sits there. So why people buy it? Because it is a store of value. It's something that people buy when they don't trust money. Historically, gold performed the best when central banks start to print money, when currency lose value, and when interest rates lower or goes under zero. In other words, when money itself becomes the problem. But right now, with the Iran war, we are in a crisis environment, geopolitical tension, inflation pressure, energy costs, and yet gold is not exploding and is doing the opposite. So what is going on? Well, the first big factor that I found is interest rates. Interest rates change everything. Right now, US 10 years government bonds are yielding on around 4.25%. And let's break this down. If you buy government bonds that are yielding a 4.25% per year, you are actually earning that. While if you're buying gold that is a non-productive asset, you're actually earning a 0%. So every year you hold gold, you have a 4.25% opportunity cost. And for big investor, this is a huge amount because they're not asking, is gold safe? They are asking, is gold worth having in our portfolio when there is a safe alternative that yields a 4.25%. And this is where most people get wrong because gold doesn't actually move based on fear alone, but it moves based on real yields. When yields are low or negative, gold performs really well, so shines. While when yields are really high, like in these times, gold suffers really much. So what we have today, high interest rates, a strong US dollar, a tight monetary policy, and this creates the perfect storm against the gold. And that's why we don't see gold going up, but going down. And now we get to the most important part. Gold protects from inflation. In a context like this one, with Iran war, oil prices going up, we expect inflation to go up, we have big inflation pressure, and the gold is not going anywhere. It's actually going down. By the way, I've made a video about Iran war and oil prices, and I leave you guys the video here or here, I don't know. So go check it out if you're interested. But returning to gold, we have right now a really big inflation pressure. But the thing that we really need to understand is that not all inflation is the same. We have monetary debasement and we have supply shock inflation. And those are two completely different things, and it's really important to understand them. Let's start by explaining the monetary debasement. That happens when central banks increase the money supply. So they start printing money, lowering their interest rates, or doing quantitative easing. So now you have more money chasing the same goods and the prices are going up. And in these times, gold performs really, really well because people escape the currency and tries to preserve their value through gold. Then we have the supply shock inflation, and this happens when there is a scarcity in the market. So in a context like this one, when we have wars, energy crisis, and we have a disrupted supply chain, now you have the same amount of money but fewer goods. So prices goes up the same way as for the debasement, but the difference is that central banks are not printing money, they're actually doing the opposite. And this is super important because gold, in this case, doesn't perform well. When inflation comes from supply shocks, central banks react by raising interest rates, reducing liquidity, and strengthening the currency. So they are actually defending the value of money. And that's exactly what stops gold to go up, because the main driver of gold is missing. So the fear of people that money lose their value is actually missing. Let's do a little recap because I know that these are so many information and it is actually hard to really view the bigger picture. Oil prices are going up. This is causing a supply shock inflation. With supply shock inflation, the Federal Reserve is not lowering the interest rates, but keeping them at 4.25%. So the combo of bond yields at 4.25% and a strong dollar makes gold less attractive, and this caused the algorithm of huge funds to start selling gold, and that's why we've seen a gold crash in the past weeks and in the last month. The second factor that I wanted to talk to you is liquidity pressure. So guys, imagine the Gulf states. So we have Saudi Arabia, Qatar, Kuwait, Iraq. All these states have lots and lots of gold reserves. And what's happening right now? Their economy that relies on the oil exportation is actually having so many liquidity problems. They simply need liquidity, and what do? They start selling gold, and this adds even more pressure in the gold markets. So no, gold is not broken, it's actually behaving exactly how it is supposed to behave in this type of context, but only if you understand that gold protects against monetary debasement and not always, not necessarily against a supply shock inflation. And remember guys, if you don't understand why an asset is moving and why it does certain things, then you're not investing, you're just guessing. And guessing in the market is expensive. That was it for today's video. Thank you guys for sticking till the end. Leave a like if you like the video, leave a comment to let me know a little bit what do you think. And nothing, stay safe out there and see you next time.